Well, despite some trade tariffs with China officially taking effect today, we actually had a very strong jobs number this morning and an excellent follow-through day on the stock market. We did have a new sector that was breaking out to the upside. In fact, we had a new industry group within that sector also breaking out to the upside. So I do want to focus on one of the key stocks within that sector for our trade application. Let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's July 6th, 2018. If you're new to these videos, first of all, welcome aboard. We're grateful to have you in our audience today. Remember, you can always subscribe to our YouTube channel. You can give us a thumbs up if you appreciate these videos, and you can leave us some comments down below, as well as check out that description area to sign up for our email distribution list. We're also heavy users of Twitter, so make sure you're following me there. My handle is at Brandon Van Zee, all one word. The Market Scholars handle is at market_scholars. And lastly, on Facebook, we do have a presence there in a group. Feel free to jot down that web address in the logo in front of you and join our group of excellent investors going forward. All right, let's go ahead and dive into the market analysis here for the day. You can see I do have the S&P 500 pulled up in front of us. And my, oh my, what an excellent day it was. Now, keep in mind, it was a little bit of a muted volume session, as we've seen all week, because this is a holiday shortened week. But the price action sure is quite outstanding, at least to end the week. Remember, if this would have been Monday, it's always a possibility that we pull back by the end of the week. But with this closing the things off for a Friday at the end of the week, that's a very excellent sign that investors were chomping at the bit to bid up prices higher and higher all week long. And so, as you can see right here, we are continuing our bullish posture. As I mentioned in the video yesterday, we already had a bullish posture on the S&P 500, so today's follow-through kind of confirmed that even further, so that was a good sign, particularly since we had a couple of days of back and forth postures there recently. So good to see two straight bullish posture days now, and with this being such an aggressive up day, you can see that that green line swung up pretty aggressively as well, and therefore even if we don't go up dramatically on Monday, we should at least be able to retain our bullish posture yet another day at a minimum. You can see that one of the other developments here with this 0.85% move. Remember, yesterday we were up about the same amount, so kind of back-to-back days there, up about the same amount. But anyway, we are now trading above that moving average. So starting on Monday, when this moving average starts to develop, it will be green. Remember, when price is above a rising moving average, that moving average on our charts will turn green, but it takes that next candle to kind of kick it into gear there. So the way the think script works, it kind of has to work in half candles. So you can see that moving average in yellow kind of goes into the halfway zone of the current candle. So starting next week, we will likely see that green starting to emerge on the moving average itself as well. That's assuming, of course, that the market isn't down big, which who knows with today's headline risk, with all the trade news and tariffs and everything, you just never know. But good signs all around that the markets have been resilient, at least if you want to be bullish on the market like most of you are. If we go over here to chart 4B, this will give us a breakdown of all four of our major market indices here in the United States. And notice that we now have bullish postures across the board. In fact, we have strongly bullish postures in the case of the Russell 2000. Notice it has that dark green shading of the background now, signifying that the intermediate term line, this green line on the market forecast, is rising and above 50 now. Same thing can be said for the NASDAQ. Notice that it is now above 50, and so we have that darker colored green right there. The S&P 500 retains kind of that lighter green shading, so yes, we have a bullish posture, but as you can see, the intermediate term line is only at 47 and rising. Once that gets up and through 50, that will turn to a darker green color. And then last but not least, we do finally have the Dow Jones kind of kicking into gear, kind of like I mentioned in the paragraph write-up that you guys get with your emails that are on your newsletter, or the email distribution list, I should say. We have a near-term divergence that was taking place here on the Dow Jones. So despite it having still a bearish posture as of yesterday, at least we had some signs down below with that near-term line that maybe we're about to turn a corner, and so now we can say that we officially have a bullish posture on the Dow again as well. But notice that the moving average line does look quite a bit different on the Dow, clearly still trending lower and is still colored red, whereas all these other moving averages, obviously prices above them, so they're either green or yellow depending on the circumstances there. So the Dow remains our laggard. I would say that the Russell 2000 remains our leader, and probably the explanation behind that, or at least what traders would have you believe, is of course what's going on with the trade wars and the idea that the Dow Jones types of mega cap types of companies out there will be affected more so if there are trade wars that ensue, whereas the kind of homegrown small domestic types of companies that are in the Russell 2000 will be less affected by that. All right, let's take a look this time at our longer term view here. Let's look at a 1040 crossover method here in this case. I like to look at this one near the end of the week for sure because, of course, these are weekly candles on these charts. Each one of these charts is 3 years in length. Each one of the candles is 1 week in time for an aggregation period. And so it's really not until Friday afternoon where that is made official as far as where the different technical indicators land. And so now that we're through Friday, these are set in stone, and this is where we stand. And so as I've been mentioning here in recent presentations, you know, the problem child of our 4 indices here is indeed the Dow Jones. That's the one where we are the closest to seeing the orange line crossing down and through the blue line. Just as a quick refresher, that's our 1040 crossover method that we're looking at. It's for a longer term approach to the markets. This is something where you don't see posture changes all that often. The last time we saw a posture change was over 2 years ago when we went bullish, and we've been bullish ever since with this posture setting tool here. Well, as time has gone on, we finally have gotten to a point where, you know, it's possible that we'll get a negative crossover here. That would be known as a death cross, because remember, sometimes people refer to this as the same thing as the 50-200 day moving average. The golden cross, death cross, kind of holds up here. I remember when we're using a 10-period exponential moving average on a weekly candle chart, it basically equates to a 50-day moving average, and the 40-period on a weekly candle chart would basically be the 200-day. So those two are very, very similar to one another. So a lot of traders are looking at that possibility of existing, but remember, nothing's set in stone yet. We've had a couple of times in the past where it's been a little hairy. You can see right over here, for instance, in looks like it was October 2016, we got very, very close to having a negative crossover, and then we got bailed out at the last second. So it's always possible that could occur here as well. All the rest of the indices are fine. It's really just the Dow Jones that is the concern in this particular case. Let's take a look at some 12 grids here, starting with the intermarket analysis 12 grid. All right, so as this gets pulled up here, remember that if you see the green background color, it means that we do have a bullish posture using that market forecast intermediate term line. And as I mentioned yesterday, preferred stocks have been one of the best performing areas within the market here recently. They continued their rally mode here today. Preferred stocks up another 0.21%. The VIX, after falling fairly significantly yesterday as well, I think it was a 7% drop yesterday, fell another 10% today. So the VIX ends the week at about 13.37, certainly closer to the historical bottoms out there. Yes, we did breach 10 a couple times along the way, but certainly 13 isn't that far away from that. And so as a reminder, when volatility decreases like it did today, that can oftentimes help many of your credit spread types of trades that are out there that you've already placed. Now, it doesn't necessarily help you along for your credit spreads that you're about to place, but it at least is helping the portfolio that you had in place already. Other things of note, a lot of us have been watching what's been going on with interest rates. Notice that interest rates fell yet again today. The 10-year yield is now yielding 2.83%. Notice the TLT, which usually acts exactly opposite as that. Remember, that's the bonds themselves. The price of the bonds went up. Meanwhile, the yields went down. And so that is now a new 3-month high on TLT, which tracks the U.S. government long bond there as well. So not only is the stock market in rally mode right now, but the bond market is doing just fine on its own as well. You actually did see a little bit more of a kind of a push higher out of the foreign bonds. That was one I mentioned yesterday that was a bit peculiar. A lot of times you do see bonds acting in unison around the globe, but right now investors are much more interested in buying U.S. government bonds as opposed to foreign bonds. But we do now have that bullish posture on foreign bonds as well. We are now above a moving average, although that moving average is not rising. So just keep your eye on that. As we look at a few other charts here, one thing I will note is notice that the US dollar, remember anytime you're on these 12 grids, for those of you that are our premium members, you can always follow along with David and I's presentation. Up here in the chart in the upper left in pink, it'll say what chart number it is. So this is chart 4E for those of you that have gone through my tutorial. So right click on any one of those 12 grid charts and go to maximize sell, and that will kind of blow it up much bigger. Now one question I did get from somebody here in the last week was, when they went through some of my charting tutorials, they said, well, not all of my indicators are showing up on my charts and they don't look exactly like yours. One thing that I will note, just to make it public here in case you weren't aware of it, Thinkorswim tries to compensate for your screen size and sometimes will basically take some of the scripts, not necessarily take them off, but just not make them viewable. This is actually an example of that. Notice that when I'm on the 12 grid here, you can't see the market forecast indicator that is on this. Now it's on there. I know that because I can come in here to this little beaker. I can go to Edit Studies, and you can see that our Market Scholars Market Forecast script is part of this study set. It's just not visible to us because again, the platform itself is kind of compensating for how much room you're allowing for that chart. That will work on these, that will work on all your charts. So if you ever do find that your charts don't look exactly like mine and you've gone through my tutorial, it is possible that your monitor size is a different size than mine, and it's the platform itself that's kind of preventing that. So just be aware of that. Since somebody asked me about it earlier this week, I thought I would pass it along in case anybody else was wondering. But anyway, let me right click on that again, go to maximize sell. And the thing that I wanted to point out to you, first of all, notice down below now you can see the market forecast indicator after I've maximized it, because now there's so much more room for Thinkorswim to display information. So anyway, up above here, notice this is the very first day since going all the way back here to April 19th that the US dollar has been trading below its 30-day moving average. So that's a little bit peculiar. Remember, this has been one of the strongest trends in the entire market over the last 3 months, just from a purely consistent to the upside perspective. Remember, this is a huge currency here that we're dealing with, so there's certainly better price performance charts out there in individual stocks and in indices. But as far as the consistency and the look of the chart itself, this was a nicely trending chart from the lower left to the upper right. Well, all of a sudden in the last 4 days or so, we've actually seen a little bit of pressure there on the US dollar. In fact, notice we now have a bearish posture on the US dollar with that green line now trending below 80. So keep your eye on that, because that has really kind of been one of the big pushes of the market here recently. At least that's been the storyline. And if we do start seeing that dollar kind of spiraling out of control to the downside, it's entirely possible some of those foreign stocks that have been beat up recently start bouncing as well. Some of the multinational companies here in the United States might start doing a little bit better on a relative basis. And who knows, maybe even the small cap stocks that have been hot as a pistol here in the United States might start cooling off a little bit as well. So keep your eye on the US dollar. It does kind of bleed into a lot of the other areas of the market. Let's take a look at another 12 grid now. Let's take a look at this time the foreign stock market's 12 grid. And here we're starting to see a little bit more resiliency, and so that's a good sign. Remember, we want the entire world to be behaving from a market perspective. It's hard to maintain strength if you're the United States stock market if all the other stock markets around the world are cratering. So it's good to have some stability. And so as you can see here, we now have more charts here on this particular grid of 12 different foreign stock markets that are bullish than that are bearish. Our bearish ones remain Brazil in the upper left, China in the upper right, United Kingdom down there at the bottom, second from the left, and then Japan in the middle off to the right there. So those are our 4 bearish ones. The other 8 are actually all bullish postures at this time. Now, the charts aren't all that appetizing, admittedly, but there are some signs of interest out there. You know, Israel doesn't look half bad. We like the way that had been a leading foreign market for quite some time, then did have a more aggressive pullback here, which you generally don't like to see. But the good news is it did find a way to kind of stabilize not far below that moving average, and now we find ourselves back up and over the moving average there in Israel. So that's one of your better looking charts there. Another one to keep your eye on is Russia. Now notice Russia is still down 2.5% in the last 3 months, but remember this is a rolling 3-month time period here, and you can see where the problem is here. Exactly 3 months ago we had this candle that then resulted with this candle on the very next day. So as this one rolls off and our new days start taking place starting next week, the Russian 3-month rolling performance is going to start looking a lot better in relation to most other international indices out there, and this chart is going to kind of change shape as well, where it's going to be looking like it's starting in the lower left. And if Russia's stock market goes up on Monday, that would end up being a new 3-month high at that point. So it's interesting how just one day can make a fairly significant difference. Usually doesn't shake out that way, but in this particular case, with this candle way up here, then gapping down to way over here on the next candle, that is actually what will likely take place with Russia. So Russia could very quickly become one of the leading foreign stock markets that are out there as well. Let's go ahead and take a look at what's going on in the United States with the U.S. sectors 12 grid now. And as I mentioned before, we do have a bullish posture on the S&P 500 in our upper left. All the rest of the charts are the 11 sectors that make up the market. And, you know, we've got a lot of bullishness out there as well. The only bearish areas are financials and industrials at this point. So we actually have a fairly responsive market across the board here. That's good for many account balances, including likely your 401k. And so as we look at some of these various charts, I like the way that discretionary is shaping up here. We had the discretionary sector as a leading sector for quite some time, had a pretty aggressive pullback here recently, but I really love how it's just bouncing around right there at that rising moving average, and it looks like it wants to use it as a launching pad. That was a really nice bounce off that moving average here today, and it's actually our highest closing price on XLY since this candle right over here on June 22nd. So I think there's some resiliency right there in the discretionary names. Now, the one that I was kind of teasing you about there in the intro that I said was breaking out to new highs was healthcare. Take a look at XLV here. A huge move higher on healthcare. In fact, I also said in the intro that there was one particular industry group within healthcare that was also doing very well. So let me type in IBB here to represent the biotech index. Again, that's IBB, Indigo Boy Boy. And as you can see here, a massive up move in IBB. Now, part of the reason for that, and notice here that it was up 3.78%. And remember, there are tons of biotech stocks out there. So this is not some sort of random ETF that has like 5 stocks in it. There are hundreds of biotech companies out there. So when the entire space is up 3.7%, that's saying something. Now, the reason for that, for those of you that have been maybe following the news, in fact, let me do this. Let me load up Twitter here for just a second. I'm going to refresh since I haven't been on here for the last couple of hours. There we go. Remember, you can follow me at Brandon Van Z, all one word. But remember, every trading day at 9 o'clock in the morning Eastern time, I'll produce this thing called the 9 at 9, which basically shows you the stocks, the 9 stocks that are up the most at 9 a.m. Eastern time and the 9 stocks that are down the most at 9 a.m. Eastern time. And the idea behind that is to give you a sense of which stocks are likely to be affecting the market that day. Because remember, at 9 o'clock in the morning on the East Coast, that's still a half an hour before the market actually opens. So anyway, notice that on today's graphic, the very first name right up there on the up column, remember up columns here on the left hand side, the down columns over here on the right hand side, but our biggest mover pre-market was Biogen Idec. It was up 13% at that time, a half an hour before the market opened. They had some very positive drug news, especially with their Alzheimer's drug, and so the market has been desperate for some sort of cure. And their product is not necessarily a cure, but it is a good maintenance type of a drug, and they're seeing progress in it. And so there are at least signs of optimism in that space that have been hard to come by in the Alzheimer's space in recent years. And so notice that Biogen was up 13% before the market opened. And if we were to then take that idea and go over here to just the regular 4A chart with just a regular market forecast on it, BIIB is the ticker symbol on that one. Notice what ended up happening. Holy macro, that thing took off. Ended up being higher by 19.63% on the day. So the 13% pre-market was just a start. So if somebody was buying it 13% pre-market, they got themselves another 6% after the market opened. And that wasn't even half the story. The stock actually got as high as 367 at one point during the day before settling down at 357. But this is one of your biggest biotech companies out there, and so it does have a bigger weight within many of those different products that are out there, including your XLV and IBBs and different things like that. So keep your eye on the healthcare space. It does look somewhat appetizing at the current juncture. Again, there's XLV that tracks all the stocks in the healthcare space in the S&P 500, and it is breaking out to new 3-month highs, as you can see right here. Now, before we get into our trade idea, one other thing I did want to bring up that was kind of a follow-up on yesterday's conversation. You guys will recall that yesterday I had a conversation about the yield curve. And in this particular graph, remember, it goes back 20 years in monthly candle charts or monthly line charts, however you want to say it. But anyway, this is chart 4J for those of you that are Premium Market Scholar subscribers, if you're following along. And I had a viewer email me, and she said, well, it looks like something's wrong with your script potentially, because you'll notice that the 30-year Treasury disappears. And it is true. I happened to notice that yesterday during the presentation myself. So she and I were kind of looking in the same place, apparently. Maybe I was pointing at it like I am right now. But you will notice that this orange line right here, which again is color-coded with the labels up at the top, so that's your 30-year Treasury yield, notice that disappears. That disappears for quite a few years, as a matter of fact. For those of you that might know your market history, you may recall that the 30-year Treasury actually itself disappeared for about 4 or 5 years. I was somewhat just getting started in the business back in the year 2000 when they made that announcement, and then a few years later they actually ended up taking it off the board officially here at the basically start of 2002. So you can see this orange line disappears, and then it finally gets back into gear right over here in 2006. So be aware that's the way that the script should look, because there should not be any data for the 30-year Treasury during that time period between 2002 and 2006. Just peculiar nature of market history there, a little tidbit for you, that the 30-year went away and then they brought it back. All right, so with that, let's go ahead and quickly take a look at the sectors that might have been doing well here today versus the ones that were relative underperformers. I'm going to pull up the sector ETFs. You can see we had a clean sweep today. All of our sectors ETFs were higher today. It was led higher by what I mentioned before, healthcare 1.44% to the upside. The staples were the laggard, but again, keep in mind context here. It's not like they were down. They were just not up as much as the rest of the market. Staples were up 0.31%. So let's go into a couple of those areas and see who the leading stocks or the lagging stocks were. So let's start with the staples this time, see which ones were potentially down today. We did have Estee Lauder down today. We also had Dr. Pepper Snapple are down today as well, down 0.72. Now be aware, Dr. Pepper Snapple is going to be leaving the S&P 500. Remember, they're getting bought out unless this is already that new version of it. I'll have to double check that, but I know they're part of it. Remember, they were teaming up with Keurig, and they're going to kind of create a new company. And so there will be some changes within the S&P 500, which also means there will be some changes within the Market Scholars 1000 list. And so for those of you that are following along at Market Scholars with those different sector importation tutorials, you're welcome to check that out. I'll probably get that updated at some point this weekend as I'm producing my sector selector. But anyway, remember, I always update that with the shared links for those of you that want to keep up with the most fresh sector ETFs, or I should say sector watch lists as well. And I believe you can find that tutorial. It was the last weekend of March for those of you that go to our events calendar. In fact, maybe that would be a good excuse to highlight that right now. Let me come over here to our website. You can see that we have our events calendar up here at the top. So let me pull that up here. And we would want to go back to June in this case and keep on going back. I'm gonna go back all the way till March. I believe it was the last weekend in March. And let's see here. Actually, one more. Sorry about that. I was still on April. Let's go back all the way to March. There we are. And yes, indeed, it was on March 31st. So for those of you that are new to Market Scholars as premium subscribers, I would encourage you to go back to March 31st on your calendar. I have my sector watch list tutorial there, and there it will give you the data necessary to import the various sectors that are out there and the stocks that make them up. All right, let's go ahead and take a peek at the healthcare stocks. I think we have a good idea who's going to be the #1 stock on that list since I already talked about it, but let's just verify, and indeed that is the case. Notice that Biogen was up 19% here today. We've got Gilead, that was up 3.3%. We've got Alexion up 3%. AbbVie, which is a stock that we've been selling puts on recently in some of my other classes, was up 2.5% today. Celgene up 2.5%. Regeneron, Vertex, Insight, CVS Health, that's another name we've been kind of dabbling with in some of my classes. Hologic and Illumina all up 2% or more, and even good old Amgen is there at 1.9%. So we've had some big movers. Look at all those stocks in the healthcare space up over 1% today, kind of following the lead of Biogen, bursting the entire sector into the spotlight here today. And so what I thought we would do here today is focus on one of those bigger named companies in the healthcare space for our trade application example. So let me go back over here to chart 4A, just a normal market forecast chart. And I'm going to pull up chart LLY. That's Eli Lilly. And you'll notice here that Eli Lilly has been just quietly moving higher here over time. Now, for those of you that follow the space, you might know that Eli Lilly actually competes to a degree with Biogen IDEC in that Alzheimer's space, but they have not had as much success there. In fact, they've had some disappointments with their versions of the drugs. But you can see that nonetheless, they caught wind of that positive sector vibe here today, and we're up 0.96%. Now, interestingly enough, I was actually looking at Eli Lilly yesterday before knowing anything about what was going to happen with Biogen today as a possible trade idea yesterday. Now, of course, I ended up going with a REIT instead, but this was actually in contention just yesterday. But part of the reason I decided to hold off on it was after yesterday's candle, we were still below some of these resistance areas on the chart right here. Notice that after today's higher, of course, we retain our bullish posture. That's what that green background color is telling us. We have a stock above a rising moving average, which is why that moving average is green. But we can now also add to its resume that it's at a 3-month high. Notice that high label is now pointing at today's candle. Not only that, but we closed at a 3-month high as well. So we close right here where I'm pointing in the upper right-hand corner of that rectangle of the candle itself, which is higher than some of these other candles that were forming some of that resistance before as well. So remember, we are going into an earnings season, so that is kind of the downside of looking at some of these individual stocks. But again, for paper money purposes and just highlighting a trade example on how to do this and how to take advantage of things, what I would was going to take a look at here today was a bull put spread. And so let me come over here to the trade tab, and I'm going to go down here to the August contracts. Remember, we typically look to sell 20 to 50 days until expiration when we're selling our credit spreads. This one has 42 days left until the August contracts expire, so that's the one I'm going to focus on for this conversation. And I typically start by looking at the delta closest to 30, so we're over here on the put side of the equation. You can see I've got it highlighted there. That's our $85 strike. If I right-click on that and I go to sell vertical, that loads up the 85, 82.50 put spread, where we're selling the 85, we're buying the 82.50. We're collecting a credit of 60 cents. which should be enough for our kind of minimum threshold of 30% return on risk that we typically try to shoot for. But remember, you can always figure that out very, very easily by just clicking confirm and send once right there. Get your calculator out, take the max profit. In this case, if we're just doing one contract, 60 bucks divided by max loss, which is 190 bucks, and that's a 31.5% return on risk. Remember, that is defined risk as well, which is nice. And again, that can be helpful if we're going to be holding this through an earnings period, which we likely will be. So if we take this trade, remember our break even on that trade would be 84.40. You can see that right here on the order confirmation dialog box, 84.40. If we wanted to look at where that was on the chart, I can get my drawn items out here, draw just a regular price level, and I'm just going to draw a line here real quick. Right click, edit it, and put it right on 84.40. And you'll notice, actually, I'm going to make this a slightly more responsive color. Let's make it blue, and let's make it 5 width, and let's make it dashed. Hit OK, and you can see that our break even on this trade will be down here where this blue line is. And the nice thing about it is, if we were to get into jeopardy with that trade, it would have to force the issue upon us by closing below the moving average, which it's shown a tendency to bounce off of in the past right over here, and also to a degree over here. But it would also have to breach this horizontal support area where it bounced from right over here, coincidentally right around that $85 mark as well. So if those two things occur, then maybe we deserve to lose money on the trade. And remember, that's always a possibility. These types of trades are usually about 65 to 70% probabilities of success, maybe 30 to 35% probabilities of failure. So it's not anywhere remotely close to 100%, but at least the odds are in our favor when we start the trade. We would just hope that it doesn't crater on us at some point during the life of the trade. So let's go back to the trade tab and place that particular trade, confirm and send, and we'll see if that can get filled on Monday. All right, with that, I want to thank you for joining me here today. It's a pleasure going to work with you as always. Remember, David should be back on with you on Monday, and I'll be back then on Tuesday, and we'll kind of get into the full swing of things here. This week was a little bit different with the holiday, and then David taking a couple of well-deserved days off after working so hard on our website here last week. So next week, for all of you premium market scholars, full class schedule, full market outlook videos, and so on and so forth. We'll look forward to joining you at that time. Best of success with your trades and your investments. Have a great weekend, everybody, and we'll see you all next time. Take care. Bye-bye.